In this video, we're just going to be looking at some of the reasons to promote free trade, as well as some of the benefits of protecting local industries. So we start off with what are some of the benefits of protecting local businesses and why businesses have been protected in the past. So firstly, protecting local businesses helps new or establishing businesses or infant industries to grow. So often in the startup stages of business, it can be quite hard to establish a foothold in the market. There's often high production costs, high costs of capital. So by putting tariffs on imports, it allows these businesses to get a sense of competition, or give a chance to sort of flourish in the market without cheap imports. Another benefit of protecting local businesses is that it makes it hard for other businesses to trade dump or to sell imports below cost price, because essentially there'll be a tariff or a quota on the amount of importing that can occur. So trade dumping is when people overseas try and dump their products on our shores at a cheap price. They do this because often they have a surplus amount of stock, or they might be trying to reduce the amount of competition coming from Australia. So they will dump products on our shore, and that's bad for Australia because it can hurt local businesses. They might go out of business, causing unemployment. So higher tariffs and trade barriers prevent that from occurring. We also might increase our tariffs just to retaliate against other countries having tariffs on their products. We want to protect local culture and identity, so we don't want to have too many American products, too many that basically reduce our sense of national identity in many ways. So buying Australian products to keep our sense of identity. It also can be bad for product standards and human safety if we are importing a lot based on the fact that they have to be on ships for a long period of time. They may have come from contaminated areas, so it is safer if we are buying Australian-made products. It also means that if we protect our local producers, we can get, I suppose, better at a range of different things. So that helps to ensure our long-term security and our ability to provide different goods and services. Free trade. We're moving towards free trade. Free trade is a situation in which trade between countries is able to occur without intervention from protectionist policies. Some of the things that have happened in the last few years, or the last 40 years really, tariffs have continually been reduced from as high as 36% in the 60s to about 3% now. This has mainly been in automotive, clothing and footwear industries. Australia has abolished all quotas, and there's very little subsidies provided for many industries. And that's led to a lot of unemployment and job closures in particularly our car industries, or motor vehicle industries. We've also signed plenty of bilateral trade agreements, so two countries with many Asian trading partners, so for example with Japan and China and South Korea. Reasons for free trade. First of all, less restrictions reduces import costs for firms that are importing products. So there's lower tariffs, which reduces the cost of production for those that are importing, which helps to lower inflation. It also helps to boost the level of competition. So free trade is really good for promoting efficiency and helping to reduce long-term inflation. So lower tariffs will reduce inflation in both the short term and the long term. Problem with free trade is it can lead to more structural unemployment in the short term, but it helps to promote employment in the long term as we become more competitive and more efficient, and that helps to boost our international competitiveness and our level of exporting. Trade also allows Australia to take advantage of economies of scale. So trade allows us to specialise in areas where we're efficient, and when we produce in bulk or on a greater quantity, we can take advantage of lower costs of production. Higher tariffs can also depreciate the dollar if we export less. This isn't a big impact. And another thing that can happen is if protected firms have higher products, they often increase their demand for raw materials. But that can lead to higher raw materials for other companies. I wouldn't worry too much about this last one. Problems with trade restrictions. So it's just a summary. They can increase inflation in the short and long term because higher tariffs increase prices. They reduce incentive for businesses to be efficient. They limit the benefits of economies of scale, and they can reduce our international competitiveness, particularly if other countries retaliate and increase tariffs. This is important. Protection is a self-defeating strategy. What we mean by that is if we put higher tariffs on imports, Australian firms have less incentive to be efficient because there's a lack of competition. And because they're less efficient, that can lead to higher prices in Australia because they're less productive. And the problem with that is if we keep being more unproductive and other countries are continually become more efficient, their prices are going to continue to fall while ours will continue to rise or stay the same, and therefore we're going to need even bigger tariffs in the future, otherwise our products can go out of business. So for example, if we give a 10% tariff to say, on cars, then our manufacturers become less efficient, and this has happened in the past, and then because they had the big tariff, they had less competition, they were less efficient, that led to higher prices. Then if the government wants to remove the tariff, they're basically stuffed because the other countries have already managed to improve their efficiency. So increased tariffs lead to increased inefficiency and can lead to more unemployment in the long term if we become inefficient and uncompetitive. And we're going to need higher tariffs to protect them in the long term. You also need to be able to link free trade to how it affects efficiency. Free trade is really good for technical efficiency because firms will have more competition, exposed to more competition, so they need to find more efficient ways to produce goods and services to help reduce production costs and promote technical efficiency. It also promotes allocative efficiency because we specialise in areas that we're good at, we do them more efficiently, and that helps to lower prices and helps to lower our production costs. Because essentially we're specialising in what we're doing, what we're good at, and therefore consumers have access to more goods and services at a cheaper price. So we get access to cheap imports, we do things more productively so our prices go down, and therefore people's living standards benefit because of the cheaper prices. So technical efficiency, we're more productive because of more competition. Allocative efficiency is about basically producing what we're good at, specialising, taking advantage of economies of scale, and therefore lowering prices and boosting living standards.